Now, stay with me in this video where I'll be teaching on how you can profitably trade liquidity in the markets. And don't forget to subscribe if you are here to do so. Turn on your bell notification so you'll be the first to be notified whenever I upload a new video. How to profitably trade liquidity in the market. Liquidity simply refers to orders or money in the market. And these orders are in the form of your buy or sell limit, take profit or stop loss. Again, liquidity equally refers to the ease with which an asset or a currency pair can be bought or sold without causing a significant change in price. Okay, now this is how it works. Every market participant needs liquidity. For a transaction to take place, when one person places an order to buy or sell an asset or a currency pair, there must be someone at the other side willing to sell. That is liquidity. Liquidity is equally regarded as the fuel for the smart money. And it may surprise you to know that it is the retail traders who provide this liquidity, because they keep entering trades when the smart money are exiting their positions and exiting trades when they are entering their own positions. Now, who are these smart money? Okay, let's look at who makes up this smart money. Number one, so we have the central banks, commercial banks, hedge funds, institutional asset managers, corporations and multinationals, high frequency traders and market makers. They don't trade the way retail traders trade, by pressing the buy and sell button. See, why retail traders keep looking for chart patterns to trade double top, double bottom, triple top, triple bottom. These guys simply wait for orders to build up at their various points of interest, then use this liquidity to fill their large order positions before moving price in their directions. Now, how do we apply this concept in order to stay profitable? The market requires liquidity to move, and it will only move once price have swept off the available liquidity. Now, as a trader, do not enter a trade when price gets to the level of support and resistance. Only trades after price have swept off the available liquidity that rests at these zones. Okay, so let's look at some diagram in order to see some profitable way to trade liquidity. Okay, so this is a chart of gold, XAUSD. Okay, now we see price coming to these particular sections over here. Okay, it sweeps up liquidity at this section before moving up. It sweeps up liquidity at this section before moving up. It sweeps up liquidity at this section also before it now start trading up. Okay, now to simply trade this, you have to wait for price to first take out the liquidity that lies at this particular section. Okay, there are liquidity lying here because this is an unmitigated demand zone. So price needs to come down first, take out this liquidity. Okay, takes it out, then it now moves up. Okay, so this is how you trade this particular chart pattern. You allow price to first take out this unmitigated demand zone, then before it starts moving up. So don't enter before price takes out this unmitigated demand zone. Next, in a ranging or consolidation market where you have your support and resistance. Okay, now remember, before you take this kind of a trade, wait for price to have swept the available liquidity that rests at these zones. Okay, there are liquidity resting at these zones. Liquidity resting at these zones. Wait for price to sweep off the liquidity at this zone before you now sell the market to the downside. Okay, in this type of setup, okay, here we have liquidity build right at this section here. Okay, where we have a lot of activities going on. The market keep going in a range. Okay, now we have liquidity build at this particular side. So before you can enter for a trade, wait for price to sweep that liquidity. Okay, now we see price taking out the liquidity before moving up. Now in this instance, when you see a market trading like this, okay, heading towards the resistance level, don't buy into this market. Okay, wait for price to sweep the available liquidity lying at this zone before you now sell the market to the downside. Okay, make sure that price have taken out this liquidity first, then you will now sell the market to the downside. Okay, equally for the second scenario. Okay, so you have price heading towards the downside. Don't enter into the market because it's heading towards a support zone where we have pending orders, okay, in form of stop loss. Now wait for price to take out the liquidity that is here before you now buy the market to the upside. Okay, these are liquidities because you see the price heading towards the downside, it comes up, down, up again like that. These are liquidity. Wait for price to take out this available liquidity before buying the market to the upside. Now, I hope this video has been of help to you. Kindly subscribe, like, and share this video. Now till I come your way again, stay profitable. Wait for price to sweep liquidity before entering into the market. See you in my next video.